So we do have the S&P futures trading sharply lower this morning. This is on the back of more concerns about interest rates going up, the economy remaining strong. And yes, you heard that right? Think about this. The economy is strong, so stocks are going to fall. Kind of messed up thought process, but the bottom line is a strong economy means higher interest rates, or at least higher for longer before the Fed is willing to cut.
In this session, master trader Gareth Soloway will delve into the analysis of stocks, crypto, silver, and gold, covering technical charts and trade setups. With decades of experience as a pro trader, Gareth Soloway's ability to deliver remarkable trades right from the start of the year comes as no surprise to those familiar with him. Soloway discusses that high beta tech stocks are under pressure as interest rates gradually rise. Typically, stocks reach their lowest point when market sentiment is pessimistic and reach their highest point when optimism is at its peak. He believes that the Federal Reserve has intervened in the bond market to curb the sudden surge in interest rates. Looking ahead, his primary concern lies with the 10-year yield of U.S. Treasury bonds. Prior to moving towards the video, make sure to subscribe to our channel and enable notifications by clicking on the bell icon so you don't miss any of our uploads.
Let's take a look at the 10-year. So this is the 10-year yield. And the reason why you want to pay attention to the 10-year yield is it's basically going to be inverse to generally what the stock market does. The higher yields go, remember the psychology of it. If you can make 10% in a bond, why would you risk investing in a stock when there's risk of that stock going down? So there's the trade-off, right? Now, some people are going to require 20%. Some people are going to require 2% return on a bond to make it worthwhile to switch out of stocks. But there's a trade-off, meaning that the higher yields go, the more people are going to say, you know what? I have this, potential to make risk-free 5%. Let me not risk my money in Tesla stock right now at these levels. Let me put it for that guaranteed 5%. And that's why higher yields in general are a negative for the stock market, right? It forces money or draws money out of it. This is why in 2021, when interest rates were zero, there was no one that wanted to be in the bond market. Everyone said, hey, why would I be in the bond market for a 0.01 return in my money market or in my CD or in my bank when I could just go in the stock market? Sure, there's risk, but you know what? I'll take that risk because at least there's nowhere else to put my money to make any money whatsoever. So that was the trade-off, and I think that's important to kind of recognize and go from there.
Bitcoin's recent price spikes underline the demand and confidence in the crypto market. This resulted in a significant surge in many cryptocurrencies. However, the price still faces a critical resistance level of $25,000 before calling the bear market over. Despite his overall bullish stance on Bitcoin, expert technical trader Gareth Soloway predicts that Bitcoin may drop as low as $9,000 based on his analysis of charts. However, it should be noted that Soloway's $9,000 target is still within range of Bitcoin's current price.
Let's go to the crypto charts here. Let's get right into Bitcoin, see what we got. So Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs. And then look at how many times we've pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest pivot was at 25,000, approximately 300. So it makes sense that that's going to be a sticking point in the near term for resistance in Bitcoin. Now, again, am I short Bitcoin? The answer is no. In fact, in verified investing crypto, we still have a long on Bitcoin, but I am kind of itching to move out of it and potentially short it. So what I'm doing here, folks, is I'm using Bitcoin as a proxy. All right, so if Bitcoin breaks above that, then that would be a bullish thing for other cryptocurrencies. As long as Bitcoin doesn't break above this area that I've just shown, then in general, that's a negative for other cryptocurrencies.
He believes the long-term bull trend for gold is intact and that by year-end we could reach $2,200 for gold. The precious metals markets are currently experiencing a resurgence of volatility, with gold and silver pausing their upward momentum due to the strengthening of the US dollar and a shift towards a risk-on mentality in the stock market. Although the chart for silver appears lackluster, there has been a notable surge in new buyers attributed to the Wall Street silver movement. He is concerned that lack of global growth could suppress silver.
It trying to hold support right here. I still think there's one more move down on gold here, down to this level here around 1800 before it becomes a full-fledged bull market. So again, and we'll go from there. So the silver chart, guys, it did hit support. I did pick up a little SLV with my trading group at Verified Investing Alerts, which is at inthemoneystocks.com. And again, we are in the money slightly on that. I added right down in this lower range right here. And again, I will continue to add. There's a lot of support here on silver at all of these lower levels. I think the most downside you probably would get would be around $20.80, somewhere in that vicinity. But I actually do like silver now. Silver is now pulled back into a range where it actually makes more sense for me. Okay.
On-chain and technical data indicate that ETA's rally has hit significant resistance levels, causing a pause. However, the risk of a downward trend seems minimal, as the network's activity suggests a positive outlook. ETH has increased by 42.8% since the start of 2023. Based on on-chain and technical levels, the rally has paused at a crucial bull-bear pivot. According to Gareth's analysis, there is a possibility of ETH dropping to as low as $650 in 2023 as the market continues to search for a clear bottom.
That's that one. Let's go to Ethereum here, see what Ethereum has in store for us. Now, Ethereum continues to have kind of the same channel lines up here. There's a lot of resistance. The positive on Ethereum, you could make a case that it's making bullish consolidation. It's not the prettiest, right? By no means is it the prettiest bullish consolidation, but it would be classified loosely as bullish consolidation. Now, what does that mean? Well, it could mean we have one more move up to maybe around $1,785 before we hit major resistance. All right. So again, keep an eye out for that. That is a possibility on ETH that you could have one more move up. What would change my mind? See this upsloping trend line that we got below briefly and tag this support. If we start trading back below that, that would negate the bullish pattern, and you'd have to start expecting a bigger move back to the 1300 range on that chart. So let's look at natural gas, because natural gas continues to befuddle even me. And what this shows you folks is that even I am not without, uncertainty. Like everyone, and I want to be clear on this. And thank you there on that CML leukemia story. I appreciate that. But basically what we're seeing here, look at the rollover in natural gas. Again, this morning, we're seeing more forced selling. And what I want to tell you guys about this is that natural gas to me is a no-brainer on a swing basis, that it will recover. It will have a big bounce. But it tells you also that a chart can still fail. And this chart continues to fail at key support lines. And so what this means is there's nothing that's going to be perfect out there. You can't be 100% trader. You never will be. All right. The market is the market. All you can do is get probabilities as high as you can. For me, that's 70 to 80%. 70 to 80% success rate. That's the best I've been able to ever achieve in the live day trading room. Granted, we're in the 90% range, but that's day trading. It's much shorter time frame. We're just jumping in, we're jumping out. But that's what I want to make clear to you guys, is that you really have to understand that you're never going to achieve perfection. If anyone ever did, then you're off and retiring, and you're just off on your yacht living in the Mediterranean, whatever you are. But the point is, the markets keep you on your toes. And Lance saying, Gareth really chased natural gas. No, I didn't chase it. My entry, literally, if we get a 15% bounce, which is about 15 cents on natural gas, I'm break even. But the point is that I thought it would bounce already, right? So I think that's the key, is that, again, this is why I average in. I continue to kind of accumulate slowly, so it gives us that opportunity to make sure that we're close to the levels. But there's no doubt that I would have expected a bounce on it already, and it hasn't happened.
What are your thoughts on Gareth Soloway's projections for gold and cryptocurrencies in 2023? Do you concur or differ with his viewpoint, and what are the reasons for your stance? Please feel free to share your views in the comments section below. If you found this video helpful, please give it a thumbs up. Make sure to subscribe to our channel to stay up to date with the latest videos and news. See you next time.